Mr. G. Chokalingam, who is the Executive Director and Chief Investment Officer at Centrum Wealth Management, who now joins in to take us through the fundamental contours of the market. Mr. Chokalingam, welcome to the show. And first, of course, as we start, a word on the Nifty and what we've seen this one do today. You know, we've had a swift 100-point move in a matter of just about 7 to 8 odd trading sessions. So do you think this sort of profit booking that's coming in now was expected?
Yeah, definitely. In the short term, profit bookings happen quite often. But however, in our view, the medium to long term trend is quite intact. As I've been saying, before March 31st of this year, we should see record level of index. And the stress can come to the market only on the eve of monsoon forecast, which would happen sometime in May. Because India cannot afford to have a second failure of the southwest monsoon. In fact, recently concluded northeastern monsoon also failed. So according to me, the market risk can come only from a possible failure of the monsoon. Otherwise, only at the fag end of the current calendar year, there could be some downward risk because of the election which is due in the early 14. And therefore, a lot of FIs can sit on sideline or they can even start booking the profits. So otherwise, I continue to maintain optimistic view. And there are a lot of triggers. We have already seen triggers in terms of government action. And yesterday's import duty hike on gold is a welcome move. And before that, we had seen railway fare, diesel price hike. And there are a few more triggers which would definitely help the market to hit the record level of index before March 31st.
Let's just then dwell a bit more on one of the points you've raised, which is the import duty that was hiked yesterday to 6% from 4%. In light of this, if you look at the NBFC space and specifically the likes of Muthoot, which are focused on gold lending, how do you see this move impacting some of these gold lending companies vis-a-vis some of the listed jewelry players like a TBZ, because that's become quite a trader's favorite as well, or a PC Jewelers or a Gitanjali?
I firmly believe that most of these companies will have a lot of stress going forward, not because of the management or the company-specific factor, more on account of the economic factors. Definitely, India cannot afford to keep on, importing more and more gold because our current account deficit is financed only by, to a large extent, FII flow. So this cannot continue. It's a big risk if they turn negative on the market. And on the other hand, twin oil deficit is growing. We are increasing year by year the huge import of crude oil as well as the edible oil. So therefore, what it would mean to these companies is that ultimately there will be direct as well as indirect pressure in curtailing the gold, which would definitely impact the gold loan companies. And second, the factor specific to the industry is that today most of the banks are also getting aggressively into the gold loan business. So therefore, the pure standalone gold loan companies would definitely have a lot of pain going ahead. Similarly, the jewelry companies, they would also be impacted by the hike in the duty. I don't think, the hike in the import duty on gold can stop at this level. If